Hey, everybody. Welcome back to the Be Your Own Bank podcast. It's everybody's favorite time of the week,
the weekly roundup. Hey, guys. Thanks for tuning back in. This week, we've got some big news. Biden has just put in an executive order to research and study crypto so that they can regulate it efficiently, effectively, and correctly.
Nice.
Yes.
That's huge, by the way.
Yeah, absolutely. It's the first time
we've
had an executive order for this.
Now we have the president of the United States talking about crypto.
Yeah.
That's no small feat. Now the fact that we're going to have to be talking about it as a government, as a society, thinking that 40 million Americans already own crypto, which, is only 16% of the total population. So there's a lot of room for growth there, but they see the potential and how you can't ignore this anymore. So the tenets of this new executive order are that the whole of government is going to be focusing on crypto. So that means everybody. And they're going to be focusing on consumer protection, financial stability, cracking down on illicit users, leadership in a global financial sector, financial inclusion, and responsible innovation. So everything that we've talked about, everything that crypto offers, all of these things, they're going to be looking into the safe application of crypto in transactions. Like, this is it. This is the beginning of the road of regulation.
And this is the right way to do it.
Yes.
They called it a coordinated and a comprehensive approach to digital asset policy. This is what we need. We can't have just this blanket, generalized regulation, because then it's going to stifle investors. So this is really thoughtful. And it's going to take some time, which is fine.
Right.
Take all the time you need. But once these regulations roll out, it's going to hit all the key factors that need to be hit to do this right. So when institutions get in, and investors invest in those institutions that are investing in crypto, it's going to be easy to do it. And there aren't going to be as many roadblocks.
Yes. Well, the most important part too is that we had concerns that the SEC was going to take over or the CFTC was going to take over, and just that was their responsibility, was to regulate crypto. And we already know, based on how we test and securities and all that stuff, that that's a slippery slope.
And it's outdated.
Exactly.
Yeah.
Exactly. So the fact that this executive order is all encompassing and it wants all of these organizations within the government to work together, for instance, the Treasury Department, the SEC, the FDIC, the CFTC, the OCC, the FSOC, the FINRA, and outside of the financial sector, the FBI, the Justice Department, and the Commerce Department. So everybody's coming to this table to figure out how they're going to be able to add to this crypto space.
Yeah, it's great. We need everybody involved because it affects everybody.
Right.
And so having these opinions come in to come up with the best possible regulations is just going to be good for everybody.
Yep. Well, and the other piece of this, which is really cool, is the executive order also says that the Treasury Department has to create a report on the future of money and how the current system may not be meeting the needs of the people. Who's been talking about that?
I only know the Bit Bros.
The Be Your Own Bank podcast. I know we've been talking about that.
That's right.
So now the entire Treasury Department is going to be tasked with doing the research to understand what crypto is and the value of it. And I think that's what's going to lead to the best innovation with good regulation.
Yeah, and it says a lot that they're admitting that their system is outdated, that it's not as efficient.
Right.
Because that will lead them to these better ways of transacting money, of investing, that is going to better the world and continue.
Well, and I think too, the fact that, we're not in this war. We're in war by proxy, right? So we're paying higher gas prices so that we don't have to kill our citizens to fight this guy who's, got a vendetta, right? But he's utilizing a new technology with crypto, and crypto is, involved in this war. How much money has been donated already?
Over 70 million now.
70 million in crypto has been donated to Ukraine.
Yeah.
So how much is Russia using? We don't know, right? We may never know. But the fact that the government understands that and says, okay, we need to get ahead of this problem, You know, and the fact that they understand that in order to be a leader in the world, they will have to have a handle on crypto. I mean, all of this is really good news in my opinion.
Yeah, I think it's great, and we of course will keep you updated as they work to figure out what crypto is in the realm of the government and how they're going to regulate it effectively. Next, we want to talk about something that isn't as good news, which is the centralization of Ethereum.
Ooh.
Yeah. So what makes a lot of cryptocurrencies good is the fact that they're decentralized, that it's, you know, a group of individuals that don't know each other, unassociated individuals maintaining this global network. But Ethereum has been infiltrated by JP Morgan.
Dun, dun, dun.
Yeah. So what happened was, it's a convoluted story. I'm going to break it down. One of the creators of Ethereum, developers, Joseph Lubin, sounds like kind of a devious name.
Sounds like a Harry Potter character.
It does sound like a Harry Potter character. He is a Slytherin, we found out.
Oh, okay.
So he is sort of the co-founder of this company called Consensus. Now, Consensus has a board of 35 plus members, and they have a huge stake in the infrastructure of Ethereum. The two main components being MetaMask, which is it's a web-based application, Ethereum wallet that allows you to access the blockchain, make swaps, and also access decentralized applications. So it's one of the most popular, MetaMask.
So what you're saying is this Consensus organization is an owner of MetaMask, right?
Yeah,
which is the software on top of the Ethereum blockchain.
Yep. So they have the intellectual property to MetaMask as well as Infura. And these are two blockchain-based companies or applications that help people build and run certain protocols on the Ethereum blockchain. So both together, they make up a huge portion of the Ethereum infrastructure. Now, here's where the issue comes into play, is that Joseph Lubin has a majority share of Consensus. And what he did kind of behind the scenes is he created another company called Consensus Incorporated, basically the same name, but just changed one of the letters. So from CAG to CSI. And he sold a portion of the intellectual property that he transferred from the original company to the new one to JP Morgan Chase.
Wow.
Yeah. So they have a 10% stake in MetaMask. And you're like, well, what's the big deal with that? Yeah. We got, more people invested. Joseph Lubin's a whale. Of course, he has a ton of Ethereum. He's worth like $3 billion. But the problem is now JP Morgan has a hold on or a vested interest in some of the biggest infrastructural components of Ethereum. Now, Ethereum itself, decentralized, but the applications on top of it aren't necessarily.
Gotcha.
So the analogy that they were using in this article is Google. Google doesn't own the internet, right? But Google owns the internet because Google has the infrastructure that everyone interfaces with that you use to get onto the internet.
Yeah. I mean,
right?
It's a verb now, right?
Yeah, Google is a verb. Yeah. So imagine that with cryptocurrency, is Consensus potentially being the Google of crypto because they own these platforms that are, user-friendly. MetaMask has a huge user base. They can kind of decide what happens. Now, they can't, manufacture transactions on Ethereum, but they can take some profits from their products. And so there's this huge audit that's happening. Basically, he transferred all this intellectual property to this new company that's now partnered with JP Morgan.
But it's just like a shell company, right? It's like a bogus company.
It's not a bogus company.
But it's his company versus a group of people's company.
Right. And so these 35 employees are now doing a multi-billion-dollar audit of this transaction that happened behind the scenes, because they think it was illegal. They think that Joseph Lubin transferred or made this deal with JP Morgan improperly. And so potentially if the litigation goes through, JP Morgan may lose their stake in some of these big Ethereum infrastructure.
Which would be a good thing.
I think it would be a good thing, but I mean, this is probably happening all over in a lot of different things.
So you're saying that the software that's built on these blockchains is not safe from these gatekeepers who could potentially come in, swoop in, take a percentage of that business that runs on that decentralized blockchain, and now they can kind of tell you what to do.
Yeah, absolutely. Yeah. And they've projected that JP Morgan, and Lubin are going to make upwards of $7 billion on this deal. When you're like, well, where's the money coming from? Because, MetaMask is my wallet. They don't have control of my wallet. No, but MetaMask facilitates trades on the blockchain,
sure,
and they get a percentage of that.
So they theoretically, JP Morgan could go, well, we want more expensive trades, or
they could definitely do that.
You have to purchase the upgrade to the software or whatever.
And that's one of the risks is JP Morgan come up with this sort of universal interface because they have access and an investment in some of this intellectual property that you would have to use. Kind of like you have to use Google. I mean, you don't have to use Google, but we all use Google. We use Google Maps. Apple uses Google Maps.
I use Bing Maps.
Oh, Bing Maps.
Have you ever used Bing Maps? I can't recommend it.
So anyways, it's really the big issue right now is they have infiltrated Ethereum at the highest level. They have become these gatekeepers that are threatening the decentralization, the inherent nature of what Ethereum and other cryptocurrencies are supposed to be.
Right.
Because they are now in control of some of the software that is run on top, making it centralized. And really all cryptocurrency is software. The way that software in a centralized system works is that they just say, here's an update, download it. Right?
I'll do it tomorrow. Check back tomorrow.
Yeah. I'll wait. But like Windows, for example, they have new technology, they send you an update, you update. With crypto, it's different, and for good measure. If Vitalik comes up, the creator and founder of Ethereum, if he comes
Vitalik Buterin.
Yeah, exactly.
Yes.
If he comes up with a better software update that's safer, whatever, he has to get approval from miners. He has to get over 51% of the network to be like, yeah, we like this.
So the miners, again, are the people who are validating the transactions on the blockchain.
Right, absolutely. Yep. So the validators have to say, yeah, we like that. It's not just here it is, download it. It's we like that. And if that happens, we get what's called a fork. Okay, so there's two different types. There's a soft fork and a hard fork. Basically, a fork being a fork in the road, a divergence of the blockchains. We have two separate. All right. So if we have two separate ones that persist, that continue throughout time, the old and the new, that's a hard fork. Not desired because then we get splits like Bitcoin and Bitcoin Cash or Bitcoin and Bitcoin Gold. We get all these different cryptocurrencies that are essentially the same but have different software features.
Well, but the update, so when we were talking about Bitcoin and Bitcoin Cash, the update was Bitcoin Cash because, once again, the bogged down system of Bitcoin can only do a certain amount of transactions. Bitcoin Cash is more efficient and cheaper to send transactions. So that's, in my opinion, a viable fork more than some of these other, SVU, whatever.
Bitcoin.
Right, is that, yes, Bitcoin Cash worked. The other cool thing about a hard fork is that if you own Bitcoin on the original blockchain and it hard forks into a new blockchain, Bitcoin Cash, you will get the same amount of Bitcoin Cash that you had in Bitcoin.
The ideal situation is what's called a soft fork. And that is where you get this divergence, you get two separate chains, but the old one dies and the new one continues to persist, which is what Ethereum 2.0 is supposed to do. There's an overwhelming majority of validators, miners that support the new update. And so when it launches, theoretically, what we're going to have is a soft fork so that the old Ethereum dies and the new Ethereum persists with all these better features, more security, quicker transactions, more efficient. Right?
Yep.
And so I just wanted to point out, I know it's technical, but we really have to look at the fact that all cryptocurrencies at their basis are software first.
Yep.
And then currency second.
Right.
So you're investing not only in a currency, but you're investing in a software and a group of engineers.
Right.
A group of programmers, a group of developers.
And what goes on top of the software? Apps. right?
Absolutely.
How do we absolutely how do we interact with the world? It's apps, right? Everything is apps. So you have to have that infrastructure for the apps to run, and then you also have to have the software. So the more efficient the software, the better the apps run, yada yada yada.
Yada yada yada. But here's the other thing too, is we talk about do your own research. And one of the things that I think is important is look at the development team, because they're the ones coming up with the updates. Look at the development team. Kevin O'Leary, Mr. Wonderful, right? He's heavily invested in Ethereum and Solana. And his whole point is, I'm investing in software. I'm investing in the development team. Gary Vaynerchuk says, I don't bet on the horse, I bet on the jockey. I think these are all good, ideas for, I guess, analogies too, for how to pick what's going to be next, because you're really investing in software at its heart.
Yeah. Yeah. You're not investing in a picture of a dog. That's not what this is. It's, that's the coolest, graphic, whatever, it's do your own research.
Do your own research and understand what you're inherently investing in. So I just wanted to give you a little bit of the technical side so that to help conceptualize what crypto really is at its basis. So I hope that's helpful. And that's the roundup.
All right. Let's take a look at these charts. All right, let's take a look at Bitcoin. We're right at 39,000 right now. We've been grinding for the last few weeks between 44 and 34. We are still in this bear pennant situation. I could foresee us continuing to grind. If we do, that's a good thing. We can make it past the 42 range, head back up to 50. That's where I'd be looking to buy some more. If this bear flag does break down, 30 to 25, highly likely. What do we always say? Be patient. I think we're not going to see a move until early April. Right around here is a point of interest. That would be mid-April. Hopefully we can maintain the 40K range. The other thing to consider is interest rates may be going up next week by 1/4%. So money is going to be more expensive to borrow. That could affect the market, or it could already be priced in because we have crashed about, 60% here. Just wait and hodl. Let's take a look at our other chart, and I'm going to move it over to a weekly here. So you can see we're still in this giant bull flag. It has tested the support a few times. If we can just keep grinding, especially on this 100-day average in green here, if we can just keep that as our support, there is a chance we move back up. And then once we can crash through the old all-time high, then it gets really exciting. All right, let's take a look at total market cap. You can see here we're still in this bear flag. If that does break down, we'll take a look here, and right around 1 trillion. So gross, but a great buying opportunity. All right, let's take a look at our dollar cost averaging. This week I've got ICX. You can see here, keeps touching the bottom. Wanted to go a little bit higher this week. Got a nice pump, and then came back and retraced a bit to the 50-day moving average. Got some volume there. So I think dollar cost averaging into ICX looks good right now. Next, we have Lisk. Same thing. We've been grinding this bottom here, and I think Lisk is a really good price at $2, just over $2 right now. Could be ready for a move. And lastly, we've got Neo. Neo, same thing. These charts are grinding towards the bottom. Almost a year of sideways movement. Last time Neo pumped, we got up to $140. Right now it's $20. So I would check out some Neo to dollar cost average into. That's it for the charts, gang. We are the Bit Bros. Remember, we are not licensed financial advisors. All content is intended for educational purposes only. Please do your own research and only risk what you're willing to lose. We'll see you next week.
Thanks for tuning in. Please remember to like and subscribe. Leave a comment. We appreciate that. You can also check us out on Spotify and Apple Podcasts, and we'll see you next week.